Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Friday, July 28th, 2023. Before we jump into all the charts, just want to encourage you to please click like if you haven't already. Please become a Wicked Stocks YouTube channel subscriber and share the content if you would with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla report, daily analysis in the Triple Q and the SPY, weekly analysis in the NASDAQ 100, the S&P 500, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for a 20% move on those underlying stocks. We also offer a 5-day free trial that goes with your subscription. So after signing up, if you don't like what you see, you can bow out within 5 days, no charge to your card whatsoever. So on with Friday's daily Tesla report. I want to back up a bit, show the big picture as usual, work our way into the day. Last week, we definitely tested, actually over the several times, a number of times over the last month and a half. You can see this weekly chart. This is a weekly channel top that goes back about 8 months that we've tested quite a bit. And in fact, last week pushed through in a significant way, only to come tumbling back later in the week to put out a key reversal high by closing below the previous week's low. That in itself is a sign, in terms of a week by week weekly bar chart, a sign of weakness of an overbought market that may well yield the channel's bottom, the channel support that is presently in the 200.61 region. So this area, 200.61, in reach over the next couple of months, perhaps below 290.33. We did also have a sell signal on that count on Thursday by closing below this rising 1/3 speed line. That is a line study that held on Monday, and on Thursday we closed clearly below it. This sets up a 240.52 3 to 5 day downside objective, and over the next 3 to 5 weeks, that channel bottom I mentioned, now at 201.67 on the daily chart, anticipated. And I will mention that as we move, and I think it's the week of August 21st, this rising channel bottom actually then coincides with the February high around 217 and change. So it may only be sort of a 217 target. It looks dramatic when I say 201.67 expected over the next 3 to 5 weeks. It is the channel bottom itself that is expected over the next 3 to 5 weeks. And during that time, pushes into the upper 210s and even the low 220s if you want to go 5 weeks out. So there you have it. That is the target that is expected by the end of August, below 262.62. And the sell signal that occurred Thursday is aligned, if you will, with the development over the last couple of weeks. Last week in particular, when we pushed through this channel top, tested the channel top essentially, only to fall, close below it. We have yet to close above this 290.33 formation. We've certainly tested it. Last week was a bit of a head fake, but came tumbling back to close below the previous week's low. That in itself a sign of weakness. So let's take a look. I'm going to summarize the day here just a bit. 262.62 is our level that may well contain buying through next week. This, for 3 to 5 day swing traders, is your short sale location. Then expecting 240.52 as a 3 to 5 day target. Will we test 240.52 today? You know, we could. It is a Friday. Volatility has definitely spiked a bit. And I will say that if we break 249.73, that is not shown, but I can describe it here. In fact, let me go back to this chart here, and I'm going to show you that 249.73, we could have drawn it out, but we didn't. It's just, if you take a look at the sequence of trade, we had the big gap here a few weeks ago, and then we came falling back to this low, we rallied to the high, into this low. If you just take a simple trend line off these lows, coming across here, 249.73 in reach. And so really what I'm saying is, holding below the 262.62 level will keep 249.73 in reach. And yes, if we break that trend line that comes down like this across these lows, if we break that today, 249.73, we can test 240.52 by the closing bell, where I would expect a daily low. We might bottom out here, by the way, into next week, into later next week, we could come off of this level. But given the sequence of events, the testing of the long-term channel, the key reversal high last week, Thursday settlement below this speed line, 240.52, we could and should get a decent bounce off of here, but will it be a bounce that will play out into later August? Time will tell, but really I think you should not anticipate as much. If we close below 240.52, we're just another week or two away from reaching what I consider to be a 3 to 5 week objective now at 201.67, continued daily settlements below 262.62. And that is sort of the downside. No need really to go over it again. Just, I guess I will, holding below 262.62, a 3 to 5 day target at 240.52. 3 to 5 day swing traders are short or getting short at 262.62, anticipating 240.52 as an objective that, if tested today, would be an area where you might cover that short position. But if we close below 240.52, 3 to 5 day swing traders stay short, as do sort of the 2 to 3 week position traders. 2 to 3 week, 3 to 5 week position traders should be short right now anyway, below 262.62. Now, what if we push above 262.62? I'll take you back to this chart here. 274.08, is it in reach today? I still have 269.85, which is the high of the low. We came close to testing that actually on Thursday. Obviously, we opened near it and sold off as we moved into the later part of the day. But it is 274.08. I don't expect it today. If we push or open today, though, above that 262.62 level, you can see it is a possibility. 274.08, able to contain daily buying pressures. And I will say that if we were to close above 274.08, which I consider to be highly unlikely, then we should, well, I'll just show you here on this chart, 284.14 likely within a day or two. You can see it as an intraday resistance level. And if we close above 274.08 right here on the far right, 290.33 then likely within 3 to 5 days. So I'm comfortable with 274.08 as our upward pivot point into next week. Until then, we are below a meaningful resistance area at 262.62 that should, the settlement Thursday below 262.62 should invite more selling. 240.52 likely by the end of next week or sooner. 201.67 by the end of August or sooner. That is the big picture. And I really don't see a reason to be bullish longer term. Well, into next week, bullish above 274.08. I've already said as much. But in terms of longer term, in terms of through the rest of the year, that comes with a settlement above 290.33 by a 1% margin. These levels rising next week. And that is our longer term buy signal through the rest of the year. Until then, we can fall off into the low 200s over the next month or two. And things seem to be lining up that way. I'm going to take one quick look here and show you, this is an S&P 500 index chart. With the wickedstocks.com subscription, you get the S&P 500 index on a week-by-week basis. Those subscribers have known for the last couple of weeks that the S&P 500 index itself has been testing a significant 8-month channel top, springing off the October low at 4590.85 this week. We pushed through it just a bit on Thursday, came falling off. I'll mention to you that the S&P 500 itself put out a key reversal high, as did the SPY. That is a sign of weakness. Key reversal high, once again, is something that occurred in Tesla last week on the weekly chart by pushing above all the previous highs and closing below the previous week's low. So the point I'm really trying to make here is that the broader market, the S&P 500, I don't consider it to be excessively bearish yet, but I have been telling subscribers that the testing of this 4590.85 channel top may carry with it bearish continuation through August and into September. Through the balance of the third quarter is possible back to long-term support, where we have a convergence of this long-term 18-month channel top and a new rising channel bottom based in part on these recent highs. So this area in the lower 41 handle should not be discounted in the S&P 500 index over the next several months, so long as we're unable to close above 4590.85. And last thing I will say, and I might as well just throw this at you, that if the S&P 500 index were to close above 4590.85, and bear in mind that that number is rising, it'll be a different number next week. It'll be higher. If we close above that formation, the S&P 500 index index, we've got a broader market secondary long-term buy signal that should yield not only the 4818.62 all-time high within a matter of 3 to 5 weeks, but I think longer term we can continue all the way up to this 3-year channel top at 5610.18. Not by the end of the year, but over the next 5 to 8 months, I would say. I think the 5610.18 channel top is in reach anyway over the next year or two. But if we close above 4590.85, that tells me this market has little interest in falling back into the 41 handle over the next few months, and instead should continue up on its accelerated upside path through the rest of the year. 10 minutes I just hit. That's all I'm going to say now for Friday's Tesla report. I'll be back Sunday afternoon, of course, with Mondays. Please check out wickedstocks.com. I will talk to you very soon. You have a great weekend.